I mean, basically investors are very keen on buying into the stock because of the dividend. And on that, basically, it did give out a very generous dividend, about 100% of what it earned. But earnings were down about 13%, which I think was negative on the stock. They attributed that to a one-off reorganization charge. But overall, I think investors would be pleased. But I guess the enthusiasm that investors had today will probably be watered down tomorrow, and we might see the stock coming down off somewhat tomorrow.
There was some heightened activity, especially on agri stocks such as Williamson tea, as well as Kakuzi. Williamson tea was actually up 14 shillings. Kakuzi was also among the top gainers. What is driving those particular counters, keeping in mind we saw that the tea prices on the auction actually went higher last week?
Yeah, the thing is that we're having, it's a double benefit for some of these agricultural companies. Tea prices are holding up pretty well, and production has really picked up, especially with the rains having come on stream. And so, investors are very positive. Looking into 2010, it's very attractive for some of these stocks, and they still trade at substantially low multiples if you compare with the rest of the market. They trade close to 25% of the market in terms of valuation. So I think there's a lot of scope for higher valuations going forward.
And how about Bamburi, which also made it to the top 5 for today? And this is a sector, if you look at the construction sector in 2008, 2009, it was probably one of the fastest growing within the East African region where Bamburi is operating. What's your outlook for that particular company and the stock going forward?
I think for 2010, earnings will be much lower than 2009. If you look at the earnings released in 2009, just last week, most of it was quite chunky, one-off items. We think 2010, even with the growth that is coming on stream with capacity expansions, we don't see them able to match the one-offs. But I think on overall, if you look at the underlying growth in profits, that was still very good. It was around 35%. Compared to what they posted, about 100%, including the one-off items. So we still think the stock is going to perform well, but if you include the one-off items, the company will be unable to maintain the same level of profitability.
Now, when we spoke earlier, you talked about local investors, local institutional investors coming back into the market, dominating about 90% of trading. Tell us, what's driving this renewed confidence on the equities market, and is it sustainable?
Yeah, most of the local institutional investors are very liquid. As you might as well know, interest rates have been coming down in the local domestic market. We had the infrastructure bond interest rates coming off despite very intensive capital raising activity by the government. And 2010 looks much more positive for the equities market. And if you look at today, for example, institutional investors accounted for close to 90% of trading, whereas foreign investors over the last close to 1 year have been accounting for 60% of trading. So you can see the appetite is probably warranted, and they're positioning themselves in stocks which they think are going to perform well in 2010.
TPS Serena is also up about 6%. Tourism seems to be getting back on track. We saw the results from the Kenya Tourism Board just the other day. International arrivals rose by 30% in 2009. Is the industry finally getting back on track, or are there other factors that are contributing to the interest on that particular counter?
Yeah, the stock took a bit of a knock 2 weeks ago when the coalition government appeared to be having some squabbles. So we are seeing it bouncing back. I think it's coming back to the previous levels where it had sort of been there for a while. So I think it's sort of like a bounce back. And of course, yeah, the tourism has been doing well. So we're expecting the results, which are expected to be relatively robust.
Kenya Power and Lighting, is it a stock you're watching?
Yes. We are positive on it. I think many investors are waiting for the details of the share restructuring on the preference shares on the balance sheet, which are going to be converted to ordinary shares, and then a rights issue is going to be done. I think most investors are concerned about dilution, but we think even with dilution, it's currently trading about 3 to 4 times price earnings ratio. We think with the dilution, it's going to trade at between 8 to 9 times price to earnings ratio, and the market is trading at about 11 times. So we still think it's a buy at this point, but obviously most investors are remaining cautious ahead of that plan.
Still sticking with the energy sector, Kobil was a darling, on the stock exchange for the last couple of weeks, but it's beginning to slow down. What's your outlook, and what are investors now looking at? Are they going away from that counter?
No, it's just trading very thinly. I think the outlook for the stock is very positive. It's trading below book value. If you look at the quality of assets that it has across the region in downstream oil marketing, the outlets are very valuable. If you look at the market share in most of the countries that it has, it has outlets in East Africa, Zambia, Zimbabwe, Ethiopia. If you look at the market share, it's quite dominant in some of these markets, and we think it's going to perform well. That combined with a recent award that it got for the Kenya Pipeline Company in an arbitration case, which is almost equivalent to 2 years' earnings, and it's trading below five times earnings. So I think there's a lot of scope for an upward rating of the stock.